Hi and welcome to the second issue of my newsletter. Today, as an advanced trader, you have probably been around the block and felt the bitter test of Forex trading. Most, if not all, of the burned accounts are due to poor money management and very high risk trading, or in other words, gambling. In this issue I am going to cover the vital importance of proper money management and risk control. Please turn off your phone, or at least silence it, and pay close attention, because this could be the difference between you being successful or losing trader, and I'm very serious about it. So let's begin. We will cover why you should treat Forex trading as your own business, the gambler's mindset versus the trader's mindset, what's the link between having an edge and statistics in Forex, risk per trade day, week and month, and how does a real-life account recovery looks like. All that, plus some more, are the subjects we will talk about. So why you should treat your Forex trading as your own business. Because first and mainly, it is your own business. You deposit money in order to produce money, gain profits, exactly like in every single business idea. Forex trading has the same emotional pros and cons as any other type of business. Anger, fear, excitement, desperation, and so on. It is very unlikely you will invest $100 in any kind of business and generate $20,000 in 2 months, right? What makes you or any other trader think so? Is Forex any different? Of course not. It takes time, consistency, and dedication to succeed. Million tried, million failed, and only those who understood that they became successful traders. Measure the risk just like you would invest in any other business. Think about it. If you open a restaurant, you make all the calculations around how many visitors you will need to have in order to be break-even, profitable versus the expenses, and so on and so on, right? So it's same idea. If you have like clothes shop and you sell clothes, right? You know exactly your expenses, your rent, your everything around, and how much profit you have to generate. You actually calculate and manage your risk versus your reward versus the expectation and so on. So trading has to be the same. You must have realistic expectations. Almost every trader in his life fall into this trap of unrealistic expectations. Now, realistic could be anything like 1%, of course, is realistic. 5%, of course, it's realistic. 10%, yes, it is. But those who actually believe it's possible for an entire life to duplicate the account every single week or every single month are living on a dream. It is impossible. We are in a zero-sum game. In order you to profit, someone else has to lose. Welcome to the financial market. So you have to find your age. You have to find your edge. You have to find how you make more than someone else. As simple as it sounds. And don't get to the wrong place, because most traders will still lose the money. To be on the profitable side, that's a privilege, and that's what separates winners and losers. It requires tons of time and biggest effort. You have to really, really, really want it, and then it will happen. And want it not just by words, oh I really want it, but don't do nothing for that. You want it, go out and achieve it. Make it happen. That's the difference. And and expectations must be realistic. Yeah, 5% is realistic, 10% is realistic, even 20 a month is realistic. But the higher you go in potential reward, the higher your risk will have to be. And that's something you have to understand. Every theoretical goal is achievable, but in order to reach higher numbers, you have to go with higher risk. Okay, it goes hand by hand, and you have to understand it. And it's same on every profession. In order to become a successful doctor, lawyer, football player, tennis player, box, okay, whatever it is, you have to study many years, you have to practice many years, you have to go through the whole process in order to become a legend. Okay, you cannot and you will not become professional over a week or a month. Forget about it. Okay, the deeper you dig, the best place you will reach. But the good part is, you have to understand one thing. Treating Forex as a business, okay, you have to understand also that not every business goes bankrupt, right? If you open a new shop, most chances you will not bankrupt if you will know to manage your business correctly. And if you treat the same way Forex account, there is no reason why you will have to blow up your account. And I hear from every trader, almost every trader I talk to, at least at the first stage of the life, saying that, oh, as long as you don't blow up your account, you are not a real trader. My dear friend, that's not correct. It might sound correct, but it's not correct at all. As I said, not every business is going bankrupt. Why should your online trading business go bankrupt? Think about it. Okay? It's very important. Now, the gambler mindset versus the trader mindset. Now, gambling is for entertainment mainly, but trading is a business. By definition in dictionary, gamble is to play at any game of chances for stakes, to stake or risk money or anything of value on the outcome of something involving chance. Investment, however, is to put money to use by purchase or expenditure in something offering profitable returns. You see the difference? Gambling is pure entertainment. Trading is for real. It's a real deal. Okay, because in gambling you gamble versus the house. In trading you are in a zero-sum game. You trade versus others. Real deal. Gambling could lead to an addiction. Trading, if done correct, cannot. Because it will always stay on the level of a job, a profession. Trading is meant to bring income, while gambling usually takes it away. Traders try to avoid risk. Gamblers are looking for this risk, for this excitement, adrenaline. Trading depends on skills and experience, while gambling depends on emotions and luck and some alcohol, mainly. So what's the link between having an edge and statistics in Forex. That's the importance of the risk-reward ratio. Now take a look on this table. If your reward is 50 while your risk is only 1, then you have to be successful only on 2%. 2 out of 100 trades you will take just have to be successful in order you are break even. Okay, so you're actually not losing money, right? And staying on the positive side. Now, if your risk is 1 to 10, 9%. If your risk is 1 to 3, 25%. 1 to 2, 33%. And the opposite, if your reward is 1 but risk is 50, you have to be on the winner's side just to break even 98% of the time. Impossible. So, you have to understand the importance of the risk-reward ratio. The higher risk, the less successful trade you will have to do in order to be profitable, or at least not to lose. Now here is a very common mistake. More trades equal more profits. My dear friend, forget about that. More trades is never more profits. Harsh reality is that the more trades you take, the less profits you are most likely going to be. Why? Because the more you trade, the more you kind of feeling that you have to find a setup, the more rules you will bend, and then the chances you will make trades that you wouldn't on any other day getting bigger, and that could lead to losses. Okay, now take a look on this statistic table. Okay, if I do use only 2% per trade and I have like 20 losing trades, sounds impossible, but maybe sometimes could happen. Okay, and you will, if you have a streak like that, blow up this account by 30% ish. Okay, you can see that right here. Okay, now if you basically it's 2%, but the account is dropping, so the value per trade is also dropping. That's why it's only 30%, right? And if you trade 10% per trade, 20 losing trades will almost blow up your account completely. Remember that. So your risk must be measured. Okay, so you could survive any crazy period could come here and there while trading, and things could happen. That's the reality. Okay, so you have to work on clear levels of risk per trade, risk per day, per week, and per month. You have to understand exactly what you are doing, how much you are risking, and respect that. Okay, remember, you are in full control of your money. As long as you have a plan and you stick to that, nothing will go wrong. The moment you leave your plan and look left and right, things will start to go bad. And you can trust me on that. Every successful trader you will ask have been there. Now that's a reality. My great friend, trader, that's how he describes success. Most people believe success is like that, one wave up. That's how successful people go. In reality, that's how they go. Up, downs, curves, boom, 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 boom. Very hard way, drilling their own way to success. Going through all the challenges, through all the hard things. That's the only way for real success. Now, how does a real life account recovered you looks like, that's how. If you lose your capital by 10%, you will need only 11 to break even back. But if you lose your account 50%, you'll have to double your account then just to break even. Got the point? So keep the risk minimum. Learn first of all how to minimize the losses. How to be as much as possible closer to break even on bad periods. Then, on the good periods, profits will follow accordingly and will take you to very, very huge profits. That's all for now, my friend. That's the contact details of my Skype and the support team email. Feel free to contact us for any issue, anything you have in your mind. We are there for you. Thank you very much, and please don't forget to download Vladimir's Trade Manager. This tool will help you a lot, this FX Manager, Trade Manager, and I hope you enjoy it. So thank you very much for your time. I hope you enjoyed that, and I will see you on the next issue. Yours, Vladimir Ribakov.